Okay, hello everyone, and welcome to this weekly trading roadmap. This is Miltos release, obviously that I do this every week on a Sunday night or a Monday today, as it is. I'm doing it on a Monday morning, as my software was acting up a little bit last night. But in any case, hopefully we can get this done pretty quickly, and we'll take a look first at the event-driven risks. A risk and money management plan, or my risk and money management plan for the week, more or less. It might change or vary on the day if volatility picks up. Obviously, the markets have been a little bit more volatile than usual. And then we'll move on to looking at a few charts, predominantly looking at the Bund and the Euro stocks, but also taking a look at a few FX markets as well. We do have some risk events this week that are going to affect some of the FX markets that I wanted to take a look at. So first and foremost, to start off with, we're going to look at obviously today, which is Monday. I want to make it very clear that it is Martin Luther King Day. So happy Martin Luther King Day to all of you guys out there. Do bear in mind, because it's Martin Luther King Day, the US session will likely be lower volume. Not necessarily, but likely. And in the past, we've seen, because it's a bank holiday, we do get lighter volumes, a little less, paper, or as we call it, well, paper is funds coming into the market and executing lots of flow. But nonetheless, we could get volatility just because it's low volume. So do keep that in mind as well. We also have the BOE's Vliege, or however you want to pronounce that name. I've given this obviously a low relevance, and in my weekly risk allocation, I've given myself about a 5% risk allocation. I'm not giving myself too much leg room here, especially because the latter end of last week, Thursday and Friday, I had a good start to last week. Thursday and Friday, not the best, so I'm going to give myself a little bit of chance to preserve myself, watch the market a bit, and then attack when I see something that I like a little bit better. Moving on to Tuesday, we've got the German CPI coming out. Also the UK PPI, RPI, and the ZOO survey. Obviously, for those of you that have been trading these years, you will know that ZOO survey does not move as it used to, and in any case is a leaked figure. So for those of you that do trade this figure, just keep in mind that it's almost always leaked, just as as we're going to move on to also the UK numbers, which are even more leaked than that, if it can be allowed to be. But in any case, giving myself, again, quite a low relevance to this day, but I'm giving myself a little bit more risk allocation coming to 15, as some of the positioning from Monday might need to adjust as the paper comes into the market. And when I say paper, again, guys, that's more like the big funds, the bigger institutional, other time frame participants come to the market. Moving on to Wednesday, we've got German PPIs in the morning. Then we've got the UK ILO unemployment and the employment figure for the UK. Again, like I was saying before, UK figures are notoriously leaked. So I would keep an eye, obviously, on the cable and how that's shaping out. Obviously, like we mentioned last week, I'll bring up the chart after we go through these events. But, you know, the cable's been looking really quite bearish recently, so I really want to take a look and focus on this. Just as we pointed out last week, we ended up having quite a very heavy week last week, so we want to see where to from here if we can continue this downtrend. And obviously these figures are going to be very important for that, so I would keep an eye on your cable, also your gilts. If you see any weird movement or unexplained movement, let's say half an hour or 40 minutes before the figure comes in, you might start figuring that they could have been a potential leak. So watch out for this, guys, because these figures are notoriously leaked. Then we have U.S. building permits and housing starts, and of course U.S. CPI, which is going to be a very big one for the Fed. Obviously, the Fed is obviously looking at CPI at the minute. They have said, some of the Fed members have said 3, 4, maybe 5 rate hikes this year, but that's yet to be seen. Obviously, if CPI actually does start moving higher, which is a trend that we might actually see this year, maybe something might trigger low. We've had low oil for a while, and we've been talking how deflationary this is, but what if we get second round effects and the consumer does awaken out of nowhere? Obviously, the retail sales that we saw out of the U.S., the last one was slightly lower than expected, so not yet any signals just yet. But when that retail sale starts to move, then we might start seeing the consumer start building the consumer might start building a case for us to think that maybe CPI might actually jump higher because of those basing effects of lower oil. It's like a major tax cut. We haven't seen it yet, but just from being in the States over the Christmas period, I'll tell you right now, when people can load up a whole SUV, fill up the tank with like $10-12, that makes a really big difference to the consumer. Now, whether that's going to come in this year or not, we'll yet to, it's yet to be seen. But if we do start seeing a pickup in inflation, the Fed might actually have to continue hiking rates, and they might start having to hike in a period where we might start entering a recession, which could mean even more volatility, guys. So keep an eye out for this. Obviously, the big one this year for me is the market being afraid of a Fed policy error. So if they have made a policy error and they have to go back on that, for whatever reason, that's going to be really, really important, and it's going to drive even more volatility because it might affect the Fed's credibility. In any case, let's move on from the Fed. We also have the Bank of Canada rate decision. Now, Bank of Canada is going to be very much in focus this week. And why is that? Because oil's been very much in focus, and thus the loonie, or the Canadian dollar, has been very much in focus. The Canadian dollar has just been on a downward spiral. Obviously, oil being down over 10% this year is not helping. That's obviously driving more expectations for a rate cut. We're getting now, the end of 2015, we saw almost a 0% chance of a rate cut, but now we're looking at about a 50% chance of a rate cut by the Bank of Canada. So is Canada, sorry, 50-50 chance of a rate cut. So we want to keep an eye on this. The loonie has been moving. The dollar versus the CAD has been just appreciating very, very much. So in the previous week as well. So keep an eye on this. We're going to take a look at the chart after we go through this in a little bit to see where we could potentially look for potential supports and resistances in this market. On this day, I'm giving us a higher relevance, 25% risk allocation for Wednesday. Moving on to Thursday, we've got European CPI. We've got the ECB coming out also. Obviously, after their December meeting, they might have lost a little bit of their credibility on how they feel as if they're building or baking expectations into the market. It seemed that they kind of mispriced or miscalculated how the market was pricing in their expectations. They only increased QE's duration. They did not increase the size, but maybe we might get some rhetoric this time saying that they're actually looking at increasing the size. I wouldn't expect it just yet. They've just acted. I think it'd be a little bit premature and almost as if they're moving because they're seeing volatility in the markets. Again, that it might affect their credibility, but maybe they might bolster up, be a little bit more dovish this time. So keep an eye on that because obviously that is going to affect some of the European markets quite substantially. We also have the U.S. initial jobless claims and the Philly Fed, not as relevant, but again, on Thursday, give myself a little bit higher relevance and a 30% risk allocation for that day. Coming to Friday, we've got the European and German manufacturing and PMI services. Very important figures. Obviously, these are preliminary numbers. Because they're preliminary numbers, you've got to pay attention to them a lot more. They're the initial estimates, so the market's going to be moving a little bit more. There's a little bit more tolerance for movement here because it's the first estimates. And then we've got the UK retail sales coming out also on the day. Further out in the day, we've got in the U.S. session, the manufacturing PMI, existing home sales, the BOE's Cunliffe is speaking, and we also have the Bund, Bubble, and Schatz OPEX coming out on Friday. So keep an eye on these little events for that day. Medium risk allocation, or medium relevance, sorry, for the day, and I'm giving myself about a 25% risk allocation going into the end of the week. So we've taken a look at the venture and risks now. Let's take a look now at the actual market structures that we want to take a look at and keep an eye on coming into this week so that we can potentially profit from them, these risk events as and when they come. So if we quickly show you guys, first of all, I